Hi guys, it's Ryan here. I'm going to do a recap for the S&P 500. I've not really touched base on this market the last couple of months. I know Ben, we used to do this, but I'm trying my hardest to try and incorporate this market in some of the recaps here. But I've just been focusing on crude oil intraday. I have been in a swing trade short on the S&P off the highs, but not really been highlighting or running through that. It's just one of my longer term strategies, but we'll go through some of this stuff in the near future. But like I said, I was sort of highlighting what I was thinking for the S&P anyways into the highs, so I'm just going to run through what I was looking at in through that period. So I'm going to start just quickly on some of the higher time frame stuff. So I mean, let's look at this is not my sort of top-down analysis template, but I've got the monthly and the weekly bars as quick references for intraday timeframes. But regards to the yearly and stuff, I mean, I'll run through that another time with the yearly distributions and all that sort of stuff. But in regards the monthly, I mean, you can see we've got this real sort of spike top reversal in play now, and I'm not suggesting that this is a higher, but I mean, this is a key sort of end of auction here currently. I mean, we've got this clear sort of spike top reversal here, and obviously depending on how we move from this area, depends on what we're looking at here for the S&P 500. So this could be a high for this year. We don't know yet, but I know everybody was speculating a test of the 2000, but there was clearly no offer up here. I mean, the market just went sideways for a long period of time in this bracket, and we finally see that end of auction with the pop up above it, and then sellers came in and just sold it down. So I mean, there was just no buyers there at the time. And, I'll run through that now. So again, what I was anticipating into the end of this month was this reversal bar with the way that the market was trading, and the market traded or closed out exactly how I was anticipating it too. So I mean, 1900s is support, so until we start breaking support and seeing range extensions down to the 1850s, then obviously there is support up here. But as you can clearly see here, we've got this clear bracket, and the high is 1950 and also 1960s, and then the low is going to be the 1720s area. So well possible to take a destination trade and clean up some of these fractals and see reversion down to the 1730s, 20s area. Longer term, we'll just have to see how we play out this high here. If the market shows us that we are going to see a reversal here and potential two-way trade balance come back into the market, or we're going to continue to just train up like we've seen the S&P do over the last 2 years. I mean, regards to weekly bars on the ES futures back adjusted contract, I mean, you can clearly see we had this sort of this overhead support here, and the market was respecting that with this balance area that came into play, and we finally had last week that sort of compression doji bar, and then this week we just see this nice breakdown sell-off. So if you were following my posts on Twitter and, and stuff, I mean, I've been suggesting this for the last 2 weeks that we're going to see a reversion back to 1920s, and that played out nicely this week. So could have took some nice profits on that if you were looking at what I was looking at. I mean, in regards to weekly, similar. So this is the SPX monthly, sorry, and then just the SPX weekly. Just track that. Obviously, this is the continuous contract on the SPX, so there's no back adjusted data on this market. So it's good just to observe both time frames to make sure everything's lining up with the S&P 500 futures. Regards to volume composite, I mean, what I was looking at here was from this low to this high, we had a retracement back to the 50%, and then we had a range extension back to the target area. Target area becomes a 61% extension, and we hit this target area beautifully, and this is where we've seen the reversal from. I mean, 1880s is going to be key support here for this market, but I mean, realistically, from now we put this top in, I mean, we can sort of start measuring the market like this possibly. I'm just going to leave it like this for the minute. I mean, I don't really trade off Fibonacci anyway. It's just there's nothing to really work with at the highs of this market, so that's what I was using at the time. Just make sure this is right. At the time, yeah. But you can clearly see these distributions at the minute, and at the minute we've just seen a rotation through into the 1900s, this lower distribution. So I mean, who knows? We may continue to find offer here into this month and completely take out that spike top reversal bar that's in place on the monthly. we just have to wait and see what happens here. You can clearly see this distribution below, and the 1660s is a real distinct area, along with 1820s, with this clear range that we were trained in, and you can just see the extremes of it so clearly on this with the data plotted like this. So just have to see what we're going to see here, but the market obviously always goes down faster than it goes up, and we grind, and then we just get slammed down. So who knows, we could see this see a reversion to the mean on the yearly. Obviously I'll explain some of this in a minute. Obviously 240 minutes, there was a key channel in place, and you can clearly see the change in perception of the market participation here. So hold on, I'm just going to make sure I get the right tools here. Parallel lines, I think it's raise. So I was looking at this channel. This is like a sort of macro term channel. You can clearly see the breakout here, so you can see the change in perception and market participation, and there is some clear fractal levels down here that we can come back and clean up and run some stops. I mean, there's going to be a ton of sell stops below the market now, so I mean that's what the market's probably going to. That's what we see here. We see all the sell stops get taken out below the sort of 1940s. For anyone who's trying to accumulate longs here, and the laggers in the market, weak longs, they came in and pretty much got run out here. So you can see the spike down and whatever from there. And so I'm just going to run through some of the intraday stuff now. Bear with me 2 seconds. Sorry about that. So yeah, I'm just going to run through some of the intraday stuff and some of the composites that I've been looking at into the time change. So just going to start with we'll start with the yearly VWAP, and you can clearly see here this year that we've seen an imbalance to the buy side. We've seen a higher value established on the year here, and you can see we had this sort of pullback to the mean, and they started to buy the developing value area high. We had this nice run up and forming this high distribution, and we basically just started to ride the 1.5 standard deviation, and it was touch and go here. I mean, if the bulls were here, they were going to come in and they were going to smash the market up higher, but obviously again with what I was looking at, it was pretty much game on to break this and reversion back to 1920s. That's what made sense at the time. I mean, sometimes the market has to break before it can rally, so I mean, if there are still buyers in this market, I mean, they are going to obviously be responsive from this area, and we'll continue to reject this year's value, and we gain back on for new highs. So just depending on obviously how we play out here, just depends on how we continue to adapt and change to this market conditions. But like I said, there are some key sort of levels here to come back and clean up, and it just depends on what we see develop here. But I mean, we are coming back. We have come back into the mean, into value of this year now. So obviously, if we continue to see rotations inside value, then it's game back on for a mean reversion down to 1860s area, and you can see this clear volume node down here where there was high volume. So if we do, if the market does come down to search for buyers, and we do see this sort of behaviour come back into the market, then obviously this 1857 is a very clear area where the market's probably going to rotate to next. And we've still got last year's value untested now, so I mean, who knows? I mean, if we really do have a spike top in place and we do see sellers start to come into this market, then we could come back into this year's last year's value that's been untested. I think we've got the previous year's value untested as well, as you can see. Let me load some more data because that's not correct. Just bear with me while I load this data. Okay, it's just taking too long to download the data, but you get the point. I'll post some analysis up about that if this hypothesis comes in on the longer term context. But anyway, running back through the rest of the time frames of the VWAPs, I mean, if we look at this quarter's VWAP, and you can clearly see here we've just seen we opened up above value from last quarter, and we've just seen two-way trade balanced rotations at the all-time highs with really no direction, no conviction in the market, and there was just no one really willing to step in here and to push things higher. So we just see two-way trade come in. Obviously you can see some weak longs accumulating, and the mean prices of sort of 1972s it seems, and we see this attempted high put in above the bracket that we were forming, and there was just no one there, and you can see the volume dried out, and we came straight back into value here, and you can see here they just started to sell value. You see that spike back up to the 1.5 standard deviation. From there was aggressive sellers in the market, and from there we've just seen a breakdown back to last quarter's value. So I mean, again, depending on how we play from here, you can see that from this quarter's perspective that there is an imbalance created here, that we could easily see rejection of last quarter's value area higher here, and we could see a reversion back to the mean and back to these 1972s. If this does happen, then we're most likely going to make a new higher. But again, if we just seem to accumulate more volume down here and we continue to trade into last quarter's value, then value will catch up with price, and we're game on for the 1880s and 1840s area, as I was explaining in the higher time frame stuff. So as you start to see here, everything's kind of joined together. The time frame changes, the way that everything forms, the weekly, daily, intraday pars. It's like playing a musical instrument and being fluent in it. I mean, when you start to observe the market behavior over long periods of time, that takes a long time to learn, you can start to sense and understand how the different time frames are moving together in sync, and how to help anticipate future movements. So again, you always have to have a hypothesis in place, but like I said, at the minute what I'm expecting is a value to catch up with price and possible further downside here. But again, if I'm wrong and in that idea, in that hypothesis, then we see rejections of last quarter's value, and we see reversions back to the mean on this quarter. That's just what I'm looking at in junction with all of the higher time frame stuff that I've just gone through. So if we look at the monthly now, very, very similar obviously to the quarterly because the time changed from last month. And you can see this month that how last month's value propped us up, and that's why we had the behavior on last quarter. So we had buyers trying to come in, we had buyers trying to buy value and trying to push prices higher. But as you can see, we just had two-way trade in the market. There was no real buyers willing to push things higher here, and there was just two-way trade in the market. So obviously, until we see an imbalance on this time frame, then we were just expecting reversions to the mean. And this is where we tried to make the all-time high, volume dried up, we came back into balance, and this is the perfect short entry from the 1.5 standard deviation. This is where I started to accumulate my short on the S&P for the swing trade down to 1920s. And this also lines up with some stuff on the composites, which I'll explain in a second. But I mean, this was just a very, very, very good area to get short. Stops above the high and above the bracket, and with reversions back to the previous and the low of last month's value. And that just worked out perfectly this week. Just very, very nice how everything played out on the time change. If we quickly look at the weekly, you can pretty much see the same sort of picture as the weeks go on. You can see here that, so this is not the weekly, it's the quarterly. You can see the two-way trade at the highs here and the consolidation. You can see the attempted imbalance on last week. We just came back in for the mean reversion, and this week we just see that pop up. We couldn't even test the value area high from last week. We just found responsive sellers with two-way trade in the market, and then we started to become imbalanced. As soon as we broke out below the initial balance for the week, you can just see this massive imbalance created on the week here. So very, very obviously nice move again down, and the market showed the way here, because obviously we opened neutral, we came back down, and we started to become bearish. We came back in then, so we've got all this value above us, which is the path of least resistance to the downside, until we sort of pull through it and find buyers. And then we found the sellers here from value. They sold it, and eventually they squeezed all the longs out, all the weak longs out, like I said, and ran the stops here. So just you can see again how the time frames come together and sort of tell the story here. I'm going to quickly run through the composites now and what I was looking at the time. Just 2 seconds. I need to try to find the chart. I thought this was my composite chart. Hold on. Right, I seem to have lost my composite charts. Right, if you bear with me 2 seconds, I'm going to build the composites up just to show you, because I must have accidentally reset this chart. Give me 2 minutes. Okay, I'm not going to run through everything because it's just this. I need to go through now and rebuild all these composites because I don't know why this has happened. But just briefly, I'm just going to run through it along with the daily chart. So you can see on the daily here that we had this bracket forming. We had all the moving averages catching up and compressing, and we had clear two-way trade in this range. And what we see here was on this day here, we see this. There was two main balancing areas in this upper composite. you could say a third one here, but there was these two main ones. This 1, 2, 3, 4, 5, 6 days of accumulation here, and then the 1, 2, 3, 4, 5, 6 days of accumulation, and then the 3 days of accumulation is we attempted to break out, and then the 4-day distribution here, which is where I started to sell the S&P. So what we had, like I said, is this 1, 2, 3, 4, 5, 6 day composite here. So this 6 day composite here was this composite here. And you can see that we had responsive buy-in from the lower of the bracket. We see clear two-way trade come in. We feel that we had this upper balance, and then on these days here we broke out and we attempted to break out higher. So you can see the attempted breakout higher from that previous value composite, and you can see that we had this poor low put in. So we had buy-in here, we had buyers come in here again, and on this day here we see an auction just at the higher. They put a new high, new low, come down, we found buyers up to the higher compression bar, and the sellers came in. So this was the end of the auction almost. I mean, this showed us intraday where there was sellers, because there was no buyers here, there was a seller here, otherwise we would have put in a high. We would have continued to one time frame, but we didn't. We broke one time frame and we left excess at the high, and we see two-way trade balance come back into the market. The next day the market opened gap down from that previous day. So then we start to build a new composite, and from there we had a 2-day sort of balancing range where we see sellers coming into the market. As you can see, we see attempted buyers, direction sell, they sold, two-way trade come back in. Next day we see short liquidation into the market. So anybody who was obviously buying, they come in the market, sold it off of the open, down to the lower of this composite where we found buyers again with two-way trade come back into the market. So we had this 2-day distribution coming into play. So what I was looking for on this day here was to get short. We opened just inside the previous day's range, or just at the highs. We auctioned above this composite area into this previous area, and this is where I started to initiate my short. It was just a perfect entry, and I can show you here. You can see that we came back into the bracket, and it was just basically a test into the bracket higher and above this two-day accumulation, along with the bracket higher, and into this upper composite. And obviously the risk on this trade was not to trade above that 1982s. I mean, my stops were above the highs obviously, but that's where the initial risk was. I didn't really want to see the market trade above 1982s. If we did, then obviously the market was finding value in higher prices here, and the mean prices was going to be 1982, and if we broke through there, then we were probably going to see initiative buying into the market into new highs. So that's what I looked to do, and that lined up again with the 1.5 standard deviation on the quarterly, which was rotational. So it was right here. So if you look at here, 1980, this high, 1980, it just lined up perfectly. And obviously there's two-way trade on the quarterly, so the expectation is reversions to the mean. Until we see an imbalance and a breakout, that's the expectation, reversions to the mean. There's two-way trade balance back in the market, balance in the market. I know it's hard to do this because we're at the all-time highs and everyone's getting excited because we're at the highs, we're going to 2000, but you have to look at this realistically. And if you look at it logically, then the market's in a trading range, the market's bracketing, the market's balanced. It doesn't matter if you're at the all-time highs, all-time lows, it doesn't matter. It's the same intraday, same trading. Until we break out of that range and see price expiration and a breakout, then the market's in two-way trade, and you want to buy the highs and sell the lows until you see the next information come into the market. So we sold the highs of the bracket, and then we see the breakout. So we see the market telling us that the market's is not seeing value in higher prices here, and they're going to come down and search for lower prices and form new balance, new value, because we're clearly not seeing off from the market here. So yeah, so that's what we saw. And then we had this this 4-day composite unfold here, as you can see here, the 1, 2, 3, 4, and the market started to trade below the 5 exponential moving average. And then we started to open gap down with a fall in 5 EMA, and from there we just basically fell apart. They ran the stops below the trading range, and they came into support here, and now they're just currently, well, they pushed the market pretty much into the 100 EMA. But you can see how everything unfolded here. So I mean, I got my swing position, most of it off into 1920s, which was just a pullback to the value area high from last quarter. So that was the destination here. I mean, I'm 80% out of this move now. If we continue to break down, I will continue to add as the market becomes imbalanced and try to establish a longer term short. but we just have to see what happens here. I mean, I'm done pretty much on this trade. I mean, I've done what I wanted to do here. I'm just going to let the market tell me what's going to happen for the rest of the trade. I mean, if we come back into balance, two-way trade, and we come up higher, I'll just get out as the market comes back into balance. But I will try hold this now as long as I can, and I will add to it, as I said, as the market continues to sell off here if we see that context happen. Regards Friday's trade, for my intraday trading, I didn't trade this day. Obviously, I just held my short, and then today, which was Friday yesterday, was when I got my targets filled into the 1920s on the quarterly. I just left them in play. They got filled overnight. But on the intraday time frame, I didn't trade crude on Friday because of you just see that large move down, and there was an opportunity off the open, but I just missed the opportunity. I was just busy doing something else, and there was literally just sell the open, and the rest of the day it was hard to trade because we came right into support, some major support, which I will highlight maybe next week. I think Sebastian did, but I was trading the S&P on Friday. So what I did off the open is I basically bought the open with stops below some support levels. I mean, I was just expecting rotations back to value, and this is exactly what we saw. So I just bought the open off of Vwap, as you can see here. So off of the open, the market came back into balance. There's two-way trade. They pushed it back up to the value area high. We see rotation to the value area low. This is a clear pattern that we always see. The market comes in, it tests the higher value, it auctions to the mean, and you see buyers step in. It's just, again, with the normally with the lows, you see comes down, it comes into value, we test the Vwap, we come back down, I mean, we break out, we come back and test higher. It's just patterns that we see in the market all the time regards how the auctions unfolding in the intraday time frame around the developing value. But again, what we did is we opened right on top of Vwap, so I basically bought Vwap off the open, and I just targeted the previous value area, and that was pretty much that for that trade. So I mean, there was quite a lot of nice volatility in the S&P Friday, so I got some good size done from 20s pretty much up to 30s. So that's a nice sort of 10 points, which I added as well as we came back into the previous day's range, and we see this nice trade fold out. And then I just waited. I sat there, waited. There's nothing going on with crude oil, and what we basically did on the S&P is we just this is the overnight trade, this is the overnight trade, and this is the intraday trade. So the S&P, we see responsive buying off the open. We came back into that previous day's range value, and we took out the stops on the overnight trade here, as you can see clearly. Market does this all the time a lot. And then all we did is we see just balanced two-way trade go back into market. We see responsive sellers from the value area high, and we basically auctioned all the way down to the overnight lows there, just filling in some volume, and from there we found support, and this is where I took another trade yesterday long. As soon as we started to find support here, and the one time frame we got taken out on the profile, then and it was into the 100 EMA, and we're so far away from the 5 exponential moving average, and we also had the support from the quarterly. It just made sense to take a destination trade back up. So as soon as the market started to come in here and we couldn't find any real sellers, and I see good accumulation here, we see the auction finish at the bottom almost, with this nice clear sort of spike here, as you can see on the volume profile. I started to look for a long trade. I mean, what I look for sometimes is when this starts to happen, because I don't really like to fade a market that's potentially out of balance. But if we look at the Globex, there was clear balance two-way trade in the market. So and here had the potential to see an imbalance and rejection, but when we started to see the market trade below the developing value, value wasn't really getting pulled down. When value gets pulled down, it's because they're selling. And there was no real big selling here because value was not really getting pulled down. It was just accumulating around here, and eventually we see that pop back in. So I mean, if the market was showing a potential imbalance, then I wouldn't have looked to have got long here from this area. But with the clear two-way trade in the market, we already had a 20-24 point range on the day on the S&P, which is a pretty large range. After Thursday's range of about 40 points. Again, I was just looking for two-way trade balance to come into the market and just fill in some volume down here. So once I started to see this happen, like I said, the one time frame got taken out. I got long right here off of this 1.5 standard deviation. Stops below the low. I mean, sometimes I know it may look so perfect, sometimes what I do here, but when you do this for long enough, you know where to get filled. And obviously after this happened, I mean, I just leave my entries at the 1.5 standard deviation. So and I'm not sitting there waiting to hit the bid or hit the market. I'm not reading the tape on the footprint. I'm just putting my stops below the low, and I put my fills into the 1.5 standard deviation, because that's the best place to get filled on this on the developing value for the day. And these are very, very important references regards to how the algos execute. So again, I left my orders here, and the market came back up. Here was touch and go. It looked like we were going to get slammed down. I managed to get I managed to get my first sort of scale out here, and then again, when I was watching the tape, it really looked like they were going to just set it down, and I was just looking to possibly bail if we see a break of the 1.5 standard deviation here as we head towards the lows. But we didn't. Luckily, we found buying, and we see the reversion to the mean. I managed to get my target field the other side of the value here. So we had two very, very nice trades here today on the S&P. I mean, we had it was at the 10-point run, and this was like another sort of 10-15 point run back up to the highest. So when the S&P does get volatile, I mean, there is some awesome opportunity to trade it, and obviously because of liquidity, you can trade it with size. So I mean, not that I'm trading humongous size here at the minute, but I mean, it's big enough for what I'm doing. Anyway, but for futures and for the future, I mean, you can literally sort of come into the market and hit it with 5,000 contracts per clip on the market. So like I said, there is a potential to do very, very well in the S&P due to the huge liquidity. I think on Friday we see 2.4 million E-mini S&P contracts traded on futures. So compared to crude, we see I think it's about 300,000, 250. So you can see the difference regards to liquidity in each market. So yeah, that's just pretty much what I've done on Friday here. I mean, if we just run through the trade for Thursday, when we see the breakout, I mean, you can just see here that I mean, there's two ways you could approach your Thursday. You could have just sold the market off the open with confidence on the initial on the VWAPs, with stops inside the previous day's range, or you could have waited for the initial balance to form. You could have waited for the market to show you the direction. We closed outside of the initial balance, and you could have sold it off of confidence. So either way, there was still pretty clear direction of conviction here, and either way you could have been very, very profitable. Obviously with the second way of trading this, you wouldn't have got the extreme of the market for Thursday, but I mean, regards risk, it was probably the more sensible thing to do here in that context. But anyway, yeah, I hope this video helps, and just trying to think if there's anything else I can sort of run through to help you guys out. I mean, one thing I did notice on Friday with the S&P is we just when we did sell off after testing value, we left all these incomplete auctions in the market. I mean, we left 1, 2, 3. There was a couple here down here that we left, and the market just came back and cleaned most of these up. So that's one thing with crude. It's a little bit more difficult. Sometimes we don't see the incomplete auctions filled, but the S&P is very, very calculated because of the high volume, and most of the time when you see that information in the market, there is a reason it does make sense. So anyway, I'm going to leave it at that. If there is any questions, then please do ask me on the forum. I'm more than happy to run through any questions you guys have, and about my trading or what I say, do, and so forth. So anyway, I hope you all had a great week and have a great weekend, and I'll catch you all on Monday. Take care and goodbye.